What's going on, everyone? About 77% of stocks in the S&P 500 closed up in the green today. And as we can see by looking at today's heat map, it was a somewhat mixed and choppy day, but there were a handful of specific stocks that really ran the show, you can say. So in today's video, we're going to cover the stocks that are moving in the strongest ways right now, but we're also going to talk a lot about the important events and important information to know throughout the rest of this week, because as we all know, the Federal Reserve is set to cut interest rates this Wednesday for the first time since March of 2020. So we're also going to look back at historical data and show what the market normally does in these situations. Either way, we have a lot of great setups, important things to talk about, and towards the end of the video, we have a $930,000 big money trade. So we have a lot of great stuff to cover today, and besides that, Tom, let's jump right into it.
Yeah, Mike, the S&P 500 did pretty good today, but it ran up right into the resistance that we've been talking about over the past couple days, right around that 563 mark. The all-time high is just a couple points away at 565, and this is all coming as the FOMC decisions this week, and we have all these crazy things going on. But there were a handful of good movers today, Mike. Palantir continued to staircase up. You know, they've been exploding lately, but one stock that hasn't done very well lately is Intel. But today, they are turning it around quite a bit, especially in after hours. They are really kicking things off. It looks like they're going to do a spin-off with their foundry business, and this pushed them up over 10% in after hours alone. But I know, Mike, that there were some rumors about Intel possibly doing this. It looks like they're following through with it, and hey, the stock's loving it right now, right? Maybe this is what Intel needs for a good comeback here.
Exactly. So Intel is one of those companies that has just been getting destroyed over the past couple of years, especially, and they're really in like panic mode right now where they have to turn things around or some bad things are going to happen to this company. But basically with this spinoff, essentially they're taking one of the areas of their business that is kind of like, I don't want to say burning the most cash, but it's taking up a lot of money, as we can see on the screen, at $25 billion just over the past 2 years. And they're trying to just like separate it a little bit, which should be able to help that area of the company itself, as well as the main company, Intel, that we all know. So Intel shareholders love to see this. And at the same time, there was a handful of other news related to Intel, like how they just got awarded a $3 billion contract from the U.S. government for national security purposes and chip production. So that's pretty huge.
Yeah, they had this, and then, of course, there was also the Amazon news as well, which I thought was pretty huge also. You know, they're going to be making, like, advanced AI chips for them. I think that sounds great with AWS here as they expand their strategic collaboration, I guess, as they call it, Mike. You know, these words are funny, right? We get partnerships, we get strategic collaborations, you get all these funny headlines. But Intel had 3 great headlines today. I think that the main one causing them to move is really the spinoff with the foundry business, but they even did have one piece of bad news as well, where apparently they lost out to AMD for some PlayStation 6 chips, but at the end of the day, it looks like the shareholders didn't care much about that, Mike. They cared a lot more about what made Intel pop up in the short term. And, you know, looking at the daily chart here, Intel was at pretty good support around $18 to $20, and now we're starting to get back into that gap fill type of zone here.
Yeah, with everything being said with Intel, I really do like the reward to risk setup. It's at such a oversold, I guess you could say, beaten down point where I think it presents a nice positively skewed risk profile. With Intel right now, the stock is right around, you could say, well, at least in after hours, $22.70 a share, where it's like, you know, a stop loss can be placed maybe somewhere around that like $20.50 area. And in terms of like profit targets, I mean, the first like major resistance we have coming up is closer to 29. And then, you know, the more wiggle room that it is, I guess you could say, given, the further out these key resistance points are. For example, there's another key area right around 32 and honestly a handful of other levels. But either way, the stock has been just so brutally oversold. And now that it's finally starting to get some pretty good news and the stock is moving in a momentum-driven way, like with it, is a really good sign. So make sure to keep a close eye on Intel going forward. The company company still has a lot of work to do, but in terms of the stock itself, this recent price action does show that sentiment is shifting, and that's a big thing, especially considering Intel is in an industry that certainly isn't going around anytime soon, as chips are only becoming more and more important in everything in this world.
Yeah, exactly. I can't believe how many things use chips. Like, I can't believe it, but Mike, I'll never forget it. Like, a few years ago, you were like, Tom, even your refrigerator has the chips in there. And I was like, no way. And I went and I looked it up. I was like, no, you got to be kidding me. These chips are literally in everything. And whenever you think about Intel, as well, they've been falling down so much, Mike, that with them starting to do some of these things to try and, like, let's say, get business flowing again, maybe get some good sentiment around the stock, that's also going to push short sellers out too. We might start to see a bit, at least a little bit of a squeeze on Intel. I know quite a few people were shorted, and I would think down here at these levels is definitely a good time to get out. But granted, I'm sure a lot of shorts already covered down here.
Yeah, so either way, keep a close eye on Intel going forward. Tom, what would you say are some key levels or just like some analysis on the charts for Intel over these next couple days?
Yeah, Intel's in a pretty weird spot. Like, I'm on the daily chart here scrolling out, and they have not been this low in a long time. Since like 2014 to 2015, they were actually that support or resistance here right around that 2015 point where all these green arrows are pointing is right around $25. As we see it start to rise over the next few days, this $25 resistance will be very important to watch for here. But you have to go back so far to see these levels, Mike. Another big resistance is around 28, and then right around that $29 to $30 mark that you mentioned would be the next one that I see there. But that's really what I'm looking for. As far as support, I'm definitely using like $18 to $19 where that recent low was as the main support. And there's even a bit of a double bottom starting to form on the daily chart there too. If that breaks, we're going to have to reevaluate things.
You know it. But Tom, we also have to do another refresh on the FedWatch tool for the week. So this Wednesday is going to be an enormously important day as the Federal Reserve is set to actually cut interest rates. And the only real question is how much are these rate cuts going to be by? Like, how big are these rate cuts going to be? And we can see right now there is now a 67% chance of a 50 basis point rate cut, which is around 0.5%. Yesterday, it was more of like a 50-50% chance between a 50 basis point rate cut and a 25 basis point rate cut, but that probability has dropped all the way down to 33%. So either way, the Feds are set to cut interest rates in a pretty decent way this week, which is definitely a good sign to see that it is becoming more, I guess you could say, clearly defined. And this is set to happen on Wednesday at 2 p.m. Eastern Time. Jerome Powell will speak 30 minutes after this event, so definitely clear out your calendar for this time. It will be extremely important, and the market is set to move quite a bit from this. This will have a big impact not only on the stock market, but also the economy going forward, as this will have trickle effects into mortgage rates, auto loan rates, and literally everything in the economy. It's that important. But what's worth noting is that in situations where we do see rate cuts, the market tends to react in different ways depending on how the economy itself is doing. As we can see by looking at this chart here, the middle of the chart, right where that zero is going up and down, shows the point at which rate cuts actually start. Normally, there are basically like two real paths that the market can take from this. If the economy is actually in an okay spot and we don't enter a recession, then the market tends to, weather this event pretty well and, continue higher. At the same time, if the economy isn't doing all that well and there are some, deep underlying problems, it could also end up pretty rough as well. But the key thing to take away is that rate cuts normally bring upon, big shifts in the market overall. It's really just a question of how will these shifts end up playing out? And that is why it's so important to keep a close eye on, let's say, new economic data, news, and developments as that data releases. But I definitely want to showcase this chart because it's pretty interesting and it's definitely worth keeping in mind.
Yeah, so I'm definitely gonna root to not have a recession this year, right? If we see the market go down that much, I mean that's a big difference, Mike, right? Now I will say this: whenever they talk about recession, a lot of people say we're already in one, So I guess it depends also on their definition of recessions and how they classify them now compared to the past. But I think the comments will be pretty funny reading about the recessions here. But it is interesting how it goes, right? Like I would have thought it would have been a lot closer than this. Now, of course, recessions generally do bring in a big negative sentiment into the market, and if we do end up seeing a negative reaction to the, let's say, data this week, I don't know, Mike. The sentiment's been getting worse and worse, in my opinion. I think we'll be getting pretty bloody at that point. I know a lot of people are calling for recession either later this year or at some point next year as well. I think that like Goldman Sachs and Bank of America and et cetera have the chances pretty high next year.
Yeah, and then another thing, when we look at the chart that we were just looking at, we could see that at least historically, on average, the market tends to, I guess you could say, like pick a direction after that 2-month mark, because you can see like 2 months after the rate cut, the market, if it's going up, that could show you that, like, okay, historically speaking, if the market is, reacting in a positive way by this time, it's reasonable to assume that the, market and economy is reacting positively off the rate cuts, while at the same time, if it's starting to sell off by that time, then you better reevaluate. But either way, definitely keep this in mind going forward. Rate cuts are very, very important. But another thing that is worth keeping in mind is, I guess you could just say, the rest of the economic and earnings schedule for the week. The Federal Reserve interest rate cuts are definitely going to be the most important things. But besides that, Tom, what else is on the schedule?
Yeah, looking at Tuesday here, 1 hour before the market opens tomorrow, there will be retail sales. Then there are building permits coming out on Wednesday as well. Those are all the things that are in, what they classify as like a 3-star economic or economic data point coming out. There are a lot of, I would say, like lesser known things like industrial production, a couple Fed speakers, and other things as well. But mainly just the Fed speakers, the FOMC stuff on Wednesday, Mike. And then looking at the earnings, there's not really too much there. We talked about this yesterday. It's pretty barren besides for FedEx on Thursday.
All right, well then we are all clear for some setups and predictions then. A stock I'm watching very closely right now is Zoom, and it is to the upside. This stock has been uptrending in a pretty good way over the past month or so, and it has pulled back a decent amount in the short term, which in my opinion is presenting a very positively skewed reward to risk situation. Right now the stock is around $67.60 a share, where a stop loss can be placed just under that $66 support area, with profit targets all the way up to $72.50 and even higher depending on how the price action and sentiment develops. Either way, Zoom is definitely on my bullish radar going forward, and I'm excited to see how it does.
Yeah, it's looking pretty awesome off this dip. I like that 66 support quite a bit. That makes for a good stop loss there for sure. And Mike, I know we've talked about Palantir a lot the past few days, and we got to mention them again because they just keep ripping day after day, right? The freight train cannot be stopped. Obviously, it will slow down at some point, but in the short term here, we're continuing to see good break after good break. So if we see another good move tomorrow morning up above 36.70, I'll start to watch Palantir very closely again for another breakout. That daily chart was fantastic, Mike. They've had a lot of good sentiment surrounding this stock, and it's done very, very well throughout 2024, even while the market was shaky. It held its ground, and now we're making new recent highs. So let's go Palantir. It has a lot of good momentum, and I know you're a long-term shareholder of this one, right?
You know it. It's always good to see Palantir moving like it is now. So good stuff there. But another stock I'm watching pretty closely is Apple, but it's actually to the downside. So Apple is one of the major stocks in the market today that actually fell, and it fell by a decent amount. It fell by nearly 3%, which is certainly a respectable move for a company like Apple. And the reason I'm looking at it in a bearish way is because Apple is continuing to act in a way that is, weak, especially relative to other areas of the market. SPY is super close to its all-time high, and even with that strength in the market as a whole, Apple is not only somewhat far away from its all-time high, but it's also actively moving further away from it and showing relative weakness. So in the event we do see the market, fall or break lower, Apple's definitely going to be one of the first stocks I look to, given how weak it has been recently. So either way, Apple's on my bearish radar.
Yeah, they had that weak iPhone demand news come out this morning, and they have not had a good day since that happened, that's for sure. I'll definitely keep my eyes on Apple to the downside in the short term as well. It definitely is showing a lot of weakness. One stock I'm looking at to the upside, though, is Tilray. And this isn't necessarily a short-term play, but I just want to mention Tilray right now because if you're somebody that is wanting to get into the MJ stocks, like let's say ahead of the election or just at a good price point, Tilray is actually very close to its support, and it just started to break out a little bit above like $1.80. So I just wanted to mention this. If we start to see a good swing back up with Tilray, as we have off of this support, like 4 to 6 other times over the past couple years, then you'll want to keep your eyes on it now. I think there's a really good risk reward. For example, you could put like a stop loss maybe around like $1.50 if you wanted to go a little lower, like $1.45. But you could target quite a bit with this stock, maybe like $2.50 towards the top end of the range. I think $2.10 would be safer, but then you might need to adjust the risk a little bit in that case. But nonetheless, Tilray's at a major support right now, and I just don't want people to forget about this stock, right? I know it makes some good headlines when it starts moving, but nobody's ever buying it up when it's low.
True that. That's how the market works, right? When things are running up, everyone wants them, but when they're nice and low, then it's a ghost town to buy them, right? Like no one cares. But with that being said, Tom, we also can't forget about some key levels and analysis with SPY overall, because we do have a pretty big week ahead of us, and it's going to be important to have all these levels plotted out.
Yeah, 100%. And looking at SPY today, there was a big support at 560, and then we've already talked about 563 a lot the past few days, but that is a major resistance along with 565. Once you get past there, there's pretty much nothing there, right? We'll be in new highs and we'll be in uncharted territory. But for right now, heading into this FOMC event, just be very aware of that resistance at 563. There is a big support at 560. I also have one around 557.50 to 558. And then also down around 555 if the SPY does end up falling that low. Personally, ahead of the event, I'm expecting a lot of chop between 560 and 563.
All right, sounds good. All right, well, with that being said, let's jump right into today's momentum plays. And with the first one, we have C to the downside.
Yeah, Citigroup's been slowly but surely chopping up, but I wonder if these banks will start to slow down here in the short term. If they fall back under $58, then watch them down. That's a pretty good support.
All right, with the next one, we have NVIDIA to the downside.
Yeah, poor NVIDIA here had a pretty rough move this morning, and they established a pretty good intraday support right around 116. So if I see a move under 115.70, then I'll be looking at them down again.
All right, and now with the last one, we have Enphase for both directions.
Yeah, we called out Enphase yesterday. It actually had a pretty good move today above 110, especially towards the end of day, all the way back up to 112.80. So for tomorrow, if it can break above 113, then keep watching Enphase back to the upside. It's had some good movement. If it ends up pulling back under 110, then watch it back down.
All right, so we have the downside level for a potential move lower. We have the upside level for a potential move higher. This is for Enphase. Don't forget about the downside levels with NVIDIA and Citigroup as well. But either way, these three stocks are on watch for potential day trades tomorrow, if and only if they break through the levels Tom listed. We are looking at these for potential momentum style trades. So the stronger these stocks move and the more consistent the price action is, the better these setups become. If these stocks don't break the levels listed, then do not force the setups. But besides that, we are all clear for today's $930,000 big money trade. And we are looking at ticker symbol WMG. So today, the big money put just under $1 million into the WMG 30 strike call options that expire on November 15th of 2024. WMG has been moving to the upside in a pretty strong way over the past week, and basically, it's bouncing in a pretty strong way off the $27.50 support level, which has been a key level historically speaking. Going forward, not only is this level important to keep on watch, but also a handful of resistance levels at the $32, $33, and $34 levels. If the stock can break past those areas of resistance, some other key levels to watch are $36 and $37.50. Either way, the big money's getting bullish on this stock here. The call options are already at the money, and there's a decent amount of time to them with momentum already building. So definitely keep a close eye on this stock going forward, and I'm very excited to see how this one does.
Yeah, I really like this support here. It's starting to come up in a pretty good way, and I would not be surprised to see like a short-term test of 32, if not even possibly more here in the short term. So just keep in mind, though, there's a little bit of time. It probably won't be something that's just, straight to the upside. Maybe expect a little bit of chop on the way up, but nonetheless, Mike, as long as you give it the time it needs, I think this is an awesome one. The risk-reward, whenever you zoom out, is pretty awesome as well. Now, I will say, if we're holding the 30 strike calls and they fall down to like, $27, let's say, that will be kind of brutal. So make sure that you're, of course, factoring in risk, making sure that you're entering and having the correct position sizing, for your overall account. But overall, Mike, great support and great potential here on this big money play.
Yep, so keep a close eye on it going forward. But as we look at whether it's WMB or Intel or the market as a whole right now, it is an exciting time to be a trader. Not only are we heading into an enormously important week with rate cuts on the schedule, because this will add a lot of just direct volatility to the market as a whole, but it will also have a very big and important impact on the stock market and the economy for, months to come. It's a very important event whenever you have the central bank shifting its policy. On top of that, we also have individual stocks at key points. Of course, we talked about Intel quite a bit today as they have, big news brewing on with their side of things, which, makes for a momentum-driven price action just like we saw today. So with everything being said, I know we always say this, but it's so important. Let's remember to trade in a smart, disciplined, long-term oriented way. There's going to be a bunch of opportunities, not only this week, but all throughout the rest of this year, especially given the election that is coming up. Don't force mediocre setups. Make sure to put yourself in a position to win by having stop losses, following the money, and trading in just a, disciplined, long-term oriented way. Resist the urge to gamble on 0 days expiration options, right? Hold off, especially with all the opportunities we have coming up. But if you guys are new to the channel, consider obliterating the subscribe button to get our videos recommended to you more often. We post brand new videos all the time and cover everything from $1 million big money trades to the most important news, information, and key events to keep on watch. But before we move on, we have to give a giant shout out to today's member of the day, Tanner B in the Stocked Up Discord. He had a great post in the Profits channel today, so we love to see this and keep on rolling. If you guys are into short-term trading, definitely check out the first link in the description in the comments down below to get in on the Stocked Up trading floor. You get full access to our army of custom bots, the big money trades on the same day the trade is made. You can chat with Tom and myself all day long and access basically all the tools, resources, and help that you need as a short-term trader. Again, it'll be that first link in the description and the comments down below. But besides that, thank you all so much for watching, and let's have an amazing week in the market.